Hey everyone, today I want to just take a couple of minutes to go through and explain to you how we are trading these bear market bounces. And just so you guys know, our house view is that we are definitely in a recession, or we probably already are in one, certainly going to head into one here in the next probably month or so. If things continue this way, it could certainly be more than a potential recession for quite a bit of time, but there are a lot of opportunities. And so I'm going to make a video a little bit later on this week on how the pros are playing this with a multi-bucket approach, but I wanted to take a couple minutes right now and show you how to take advantage of a bear market bounce. And I think it's important to understand that some of the sharpest rallies that you'll ever see in any market environment happen in bear markets, and there's a reason for it. The simple reason is basically just there's more volatility, and so people, even the bears, when they're short, they get squeezed, and then they have to cover their shorts, and so even the bears tend to lose money in the market in a bear market if they're not positioned properly. So one of the ways you can do this is just using very technical parameters, and that's one of the great things. So a lot of people we know a lot of people that are looking at the markets from a more active perspective use technicals, and of course we do that as well. So if you look at a simple chart of the S&P 500, what you'll see is, first of all, let's kind of look for some confluence levels. So first of all, we have a long-term chart here. This is the multi-year weekly chart, and I drew that black line. And just to kind of show you this, and you can see what used to be support now has the potential to become resistance, and that resistance level comes in on the SPY ETF, comes in around 250. Again, you have to give or take this a few points, maybe even half a dozen points, because everything is so volatile. But that's kind of one area one could potentially look for. So if we now make this a daily chart, and we look at some Fibonacci levels, and I made a video earlier this week to talk about these Fibonacci retracement levels, which I think are really interesting spots. So the first, what we did is if you know how to draw these Fibonacci retracement levels, let us know down here. I'm happy to make a little separate video for that. But you take your Fibonacci retracement tool, you put it to the high of the move, to the recent lows, and you can see that so far we've had a 23.6% Fibonacci retracement. That's your first level of potential resistance, around 246 on the SPY ETF, again, give or take at least a few points. So this is not too far from that 250 area where the lower end of that long-term line just comes in as resistance that I just showed you. But again, bear markets tend to overshoot both on the downside and on the rally side when we have bear market bounces on the upside. So I actually think we have the potential to get closer to 265 on the SPY, maybe even 270. So from the close of the trading close on the March the 24th, that would be another, let's call it 8-9%, which would take the entire rally off the recent lows. If in these are going to be the recent lows, would get it closer to 20%, maybe even 25 to maybe even 30%. And that is well within the reason of a bear market rally. If you look at the Nikkei, for example, right now, the Nikkei just had about a 20% rally over the past like 2.5 days or so. And you can see it is coming into some major overhead resistance. Again, it can overshoot for sure, but I do think a lot of these indices, if not all of them, are going to make lower highs that we can then re-short into. But that'll be a topic for another day. We are certainly preparing our clients for that proactively. The Market Rover has been a great guidance tool for that. But again, what we're looking for right now is a sort of a short-term bounce. Again, maybe we see 265 in the SPY, maybe even 270, entirely within the spectrum of possibilities. If you look at the SPX itself, that's the S&P 500, so you know those terms. If you look at 2650, that's about 2,650. Corresponds to the 265 level I showed you before in the SPY, and maybe 2,700. So those are the levels we're looking for. Again, we definitely want to consider this a bear market bounce. This is how we're looking to do it. Again, small size, but ultimately we'll probably make lower highs where we probably will have a very high conviction trade to then actually go back to the downside in terms of fading the market rally. So if you guys enjoyed this, please give us a thumbs up, like, comments, share it with anyone that you think is interested in this kind of stuff. Again, we're sure trying to help you in this market. There's a lot of opportunity, but you got to make sure you do it properly. So anyway, hope it helps. Talk to you guys soon.